You've bought every course, followed every guru, tried every proven strategy, and still, your account balance keeps shrinking. You stare at your trades, praying this one turns it around. But deep down, something's gnawing at you, worse than a losing streak. What if the problem isn't you? Not your discipline, not your psychology, not even your strategy. What if the whole game is built to fail you, and no guru wants to admit it? Let me guess, you've got that account you can't even look at. It started at 10 grand, dropped to 7, then 3. You told your spouse it's a learning curve, but your gut knows better. You've tried scalping, swing trading, Discord alerts, magic indicators. Nothing sticks. Now you're thinking maybe you're just not cut out for this. But here's the truth no one tells you. It's not your fault. The entire industry lied to you from the start. And in the next few minutes, I'll prove it. I'll walk you through the research, the math, and the mechanics behind why 99% of day traders lose. Not because they're undisciplined, but because the game is rigged before you even hit buy. Here's what I'll show you. A 15-year study tracking nearly 500,000 day traders and how barely any made money, how brokers profit off your losses, and why free trades aren't. The truth about high-frequency algorithms front-running your trades, why even trained pros with capital and coaching still crash, and most importantly, the simple proven path that actually builds wealth. I get it. This isn't some 90-second TikTok with a rented Lamborghini, but the average day trader loses $8,900 a year. So if you're serious about real money, this 10-minute video could save you thousands, even tens of thousands. You can keep chasing thumbnails and Instagram wins, or face the truth no one else says out loud. I'm not selling a course. I don't run a paid Discord. I don't profit when you lose. That's why I can say what the others won't. I've dug into the data they ignore, the regulatory filings they skip, the peer-reviewed math they hope you never find. This isn't my opinion. It's cold, brutal, verified truth. The financial industry doesn't want you to win. They want you confused, desperate, and addicted, because the more you trade, the more they make. But real financial freedom, it doesn't come from timing candles. It comes from understanding how the game's played and refusing to play it on their terms. So if you're ready to stop being the product and start becoming the smart money, buckle up, because everything you think you know about day trading is about to be debunked. Let's start with this. In 2014, researchers studied 450,000 day traders on Taiwan's stock exchange. That's not a sample, it's an entire city's worth of traders. They tracked them over 15 years. Here's what they found. Less than 1% were consistently profitable after transaction costs. Let that sink in. 99 out of 100 lost money, consistently. But here's the real kicker. Taiwan's market is actually easier for retail traders than the US. No payment for order flow, less high-frequency trading, more transparent books, and still, they failed. So, when your favorite guru flashes profit screenshots, either he's lying or he's literally the 1 in 100 exception. Which one seems more likely? Still not convinced? Let's check Brazil. Researchers tracked 19,646 day traders from 2013 to 2015. Same story. 97% lost money after just 300 days. But here's the gut punch. Of the 3% who did profit, only 1.1% made more than minimum wage. Yes, you heard that right. You'd have better odds working the grill at McDonald's. And the longer people traded, the worse they did. This wasn't a learning curve. It was a death spiral. The market wasn't teaching them, it was draining them. Maybe you're thinking, that's all overseas and those are amateurs. Okay, let's talk about pro traders in the US. Proprietary trading firms give you everything. Daily training, mentorship, massive capital, institutional tools, speed, tech, every advantage a trader dreams of. And still, 96% of those traders fail to make a living. Even in the most ideal environment, only 4% walk away with consistent income. So if they can't beat the market with all that, what chance do you have with $5,000 in a YouTube tutorial? Now let's pull the curtain all the way back, because this isn't just bad luck, it's math. Day traders have a speed disadvantage. High-frequency firms have their servers inside the exchange. You click buy, your order takes milliseconds, theirs get there in microseconds. They see your trade and jump in front of it. It's like racing someone who already crossed the finish line, and it's legal. Then there's payment for order flow. When you trade free on certain apps, your broker sells your order to hedge funds. They profit by trading against you. Yes, you're the product, The SEC fined one broker $65 million, then another $45 million. Nothing changed. Retail traders also face dark pools. About 18% of trades happen in private exchanges, where hedge funds can hide their orders and see yours. Imagine playing poker where they see your cards, but you can't see theirs. The cost. Studies show these built-in disadvantages cost the average trader $13,000 per year on a $50,000 account. That's a 26% hit before you even start. This isn't trading, it's harvesting. You're not a player, you're the prey, but you don't have to be. I've torn apart the fantasy. Now let's talk about the real way out. Not a hack, not a shortcut. A simple, proven path that works. It's called investing, not trading. Investing. Trading guesses what a stock does tomorrow. Investing bets on what the economy does over decades. Trading tries to outwit algorithms. Investing just asks you to believe in progress. Which sounds more doable? Here's your wealth building system. Step 1. Dollar cost averaging into index funds. Same amount every month, rain or shine. The S&P 500 has averaged 10.5% annually for 50 years, even through crashes and recessions. If you took the $500 a month you burned on trades and invested it for 30 years, you'd have over $1 million. Step 2. Add dividend-paying stocks. Think Coca-Cola, Johnson & Johnson, Microsoft. These stocks pay you just to own them. Reinvest those dividends, and you build a compounding machine. Warren Buffett hasn't sold a share of Coca-Cola since 1988. It now pays him $700 million per year. Step 3. Be patient. Let time and compounding work. It's not flashy, but it crushes day trading returns. And this time, the math is on your side. Picture this. 2 years from now, you've quit day trading. You're not stressed, you don't hide trades, you're not glued to your phone. Instead, your portfolio grows monthly. Dividends reinvest, wealth snowballs, you sleep better, live better, win by slowing down, while day traders burn out chasing speed. None of this is easy to hear, but sometimes the kindest thing is telling the truth. Day trading isn't just hard, it's a mathematical trap. Brokers win when you trade, gurus win when you chase. Algorithms win when you click. Everyone profits, except you. But the market can still build wealth if you stop playing the rigged game and start playing the long game. Here's what I want you to do. If this woke you up, if you're ready to quit being the product and start building real wealth, subscribe. This is just the beginning. I'll be posting more content on how to build wealth the boring way, the way that actually works. Hit the bell so you don't miss it. And if you know someone still getting bled dry by day trading dreams, share this video. Save them from financial suicide. Subscribe, share. Let's build wealth together. And as always, peace and profits to you all.